All right, we're early today. Ladies and gentlemen, this is the NFT show number 4. In today's show, we are going to be discussing Cobie and his perspective on NFTs. Cobie, very well-known crypto trader and host of Up Only, went on the mic and talked a little bit about what he thought about NFTs via Twitter, so we'll definitely discuss that. We'll also talk about the royalty conversation that's happening on the Ethereum side of the NFT space. It had already happened on the Solana side a couple months back. And on that note, we're also going to discuss Solana and how it might be moving faster than Ethereum. So definitely stay tuned for that. As usual, nothing in this video is financial advice. We are not financial advisors. The NFT space is incredibly risky, so always do your own research. Shout out to our sponsor, FTX. You can sign up at thenifty.com/FTX or with the code THENIFTY on your FTX mobile app. If you spend over $200 on a cryptocurrency of your choice, not only will you be paying some of the cheapest fees in the biz, but you'll also get $20 of that cryptocurrency airdropped into your account if you use our code. So definitely sign up for it. And if you enjoyed the content, hit the like button, smash the subscribe button. You already know what to do. So gentlemen, we're coming off of a weekend of not a lot of activity in the NFT space, and we see some engagement between crypto Twitter and NFT Twitter, specifically between Deez, a very well-known NFT influencer, one that's never put out a project. So in many ways, I think a lot of people still are kind of viewing Deez as an uncompromised thought leader. And Cobie from Up Only, well-known crypto trader, crypto OG. Some people go as far to say that Cobie's a genius. They throw that word around with him. And there was a little back and forth on whether NFTs are just altcoins with pictures, which made some NFT investors, NFT holders, NFT market participants, people in the NFT space, frustrated. But then Punk6529, who's an NFT native person, said, yeah, they are just altcoins with pictures. And the NFT market seemed to be like, yeah, it sounds okay when it's coming from him. So what do you guys make of this? What do you think of crypto Twitter getting in the mix with NFTs right now? Like, what are your thoughts on all this?
Well, I agree with Cobie. NFTs are altcoins, shitcoins, and a waste of money for most people 98% of the time. So that's where I'm at. We've been really bearish recently. And that has nothing to do with the time spent in the forest, of which I've had very little recently. It's much more focused on the fact that the market it's been a tough market. We've seen low volume in the NFT space, just insanely low volume, some of the lowest levels ever. At least over the past year. Yesterday, for example, a measly 7,300 ETH. I mean,
damn, that's like 10 crypto punks.
Okay, it's not that. I think your math is off there. Actually, maybe it's not that far off. I guess it's like 70 crypto punks basically.
Yeah, I missed a zero.
Yeah, so 70 crypto punks is what you got in daily volume. This chart used to be on US dollars, but I guess they're not doing that anymore. So anyways, 7,300 ETH. That's pretty measly. We haven't actually seen that at all in a long time. So yeah, I don't know what to think about this. We're out here. We're out here.
We're doing our thing. Kicks, any thoughts?
Yeah, I mean, I completely agree with Cobie. That's why I thought it was a little interesting that people had such like a visually, negative response to him saying that NFTs are altcoins, because that's literally what they are. Like they're a token. they're a tradable token with a picture attached. It seems a little odd to me that people like freaked out so much about him just making that reference. I mean, in like, what is an altcoin? Like, I think that some people misunderstand like altcoin for like shitcoin, which there are definitely shitcoins and altcoins, but not all altcoins are shitcoins. Like Matic is considered an altcoin. Like, you know what I mean? Like Ape would be considered an altcoin. So like calling something an altcoin isn't like a negative connotation. If you call something a shitcoin, sure, that's a negative connotation. Way back in the day, PO, we used to say punks are Bitcoin, Bored Apes are Ethereum, and the rest is altcoins. You know what I mean? So like we've made those comparisons before. So yeah, I completely agreed with the take. I don't know why there was so much controversy around it. And Cobie is an incredibly smart guy. Has a lot of great takes. I mean, he actually advised Ape DAO or whatever they're calling themselves on what to do with like the ape coin and incentives, et cetera, et cetera, et cetera. And they were talking about, you know, doing staking for ApeCoin, and he basically told them like staking is like useless. It's basically like bribery. You're bribing people not to sell their assets. That's what you're doing with staking. And then they proceeded to take none of his advice, and they're going to emit close to $1 billion in staking emissions in the first year with ApeCoin. So we'll see if Cobie's take on that's right. But yeah, that's not a controversial take to me. I completely agree with what Cobie said. Having said that, with like generally like crypto Twitter in general does not pick NFTs well, and does not, they certainly trade NFTs like they're shit coins. They pump them and they dump them with some pretty weird projects. But I'm a huge fan of Cobie. Completely agree with this take. I don't think it's controversial.
Yeah, I think that like at the end of the day, people that make like their kind of living, so to speak, off of like Twitter engagement, that's something that, you know, they'll get drawn into something like that. So I just almost felt like it was something to talk about between that and the royalties conversation. So I guess the royalties conversation for Ethereum was started because aliens captured the attention of the market and didn't have a royalty. Am I right about that? That's why?
Yeah, definitely. That's what set it off. I mean, as you said, Solana had already been discussing this for an extended period of time, but I think also SudoSwap set off the conversation as well, because
Yeah.
yeah, is that what you're going to say, Nick?
Yeah, you got SudoSwap, and then I saw Zeneca tweet, I don't see any way that NFT royalties don't go towards zero, basically.
It's exactly what Pio said. I mean, look at any sort of trading market. Like, look at how you used to have to trade stocks. You used to have to pay $5.99 per transaction, which is absolutely butchered retail's ability to trade. Fast forward 20 years from now, Pio's alma mater, Robinhood, is giving, you know, free trading away. So that, you know, the idea that secondary fees, whatever you want to call them, is going to gravitate towards zero isn't like unusual in my mind.
Well, OpenSea only charges like 0.25% or something like that.
2.5.
Okay, so that part to me is substantial.
Yeah. And that's done, because all that you're talking about is inefficiency from a technical perspective. And Nick knows this stuff better than anything else. Like, I think we can all agree that OpenSea is not like a well-oiled machine yet compared to what it could be or what an NFT marketplace could be. It's the most widely used NFT marketplace. The amount of volume that has happened on OpenSea is staggering. And I remember during 2021, Kix, at one point you praised OpenSea on Twitter because you were like, look, we need to talk about how like OpenSea has been able to handle the scale of new NFT market participants and the amount of liquidity that came into the NFT market. It was a lot. Like, look at that volume chart from August 2021 through January 2022. It's an insane
amount. And there was no alternative. There was no alternative platform that really would have facilitated that level of volume. And Pio, you and I came from Nifty Gateway, where
there were issues with the platform.
Like, but just the
the fees were crazy.
Like 15%. Yeah. Yep. Were you going to say something, Nick?
Well, I think that you also see during the Nifty Gateway drop or collapse, whatever you want to call it, basically the bear market, which I don't think has ever recovered in any, like, you've seen spikes and stuff, but instead what you saw was spikes in those pieces, but the transactions had shifted heavily over to OpenSea on like X copies. And I guess Mad Dog Jones was still seeing activity. I don't know. I don't hang out on Nifty Gateway enough to actually do a proper assessment. But what I was going to say is, I remember when that bear market happened, all the collectors were suddenly saying, well, what else do I get for this NFT? Because they were pissed off that the price of the NFTs they had purchased had gone down in value and they had made a bad trade. And what we're seeing in the market right now is high emotion. We're seeing a lot of people being pissed off. We're seeing frustration, and we're seeing people just pissed because their bags are down, basically. And I think that, to me, is the biggest thing, is that so you have collectors that are now saying, oh, man, I saw someone tweet in response, the creator royalties is just a rent-seeking activity. And I'm like, maybe, but the bottom line is like, part of the compelling offering of NFTs was literally that creators get ongoing royalties. That was a breakthrough.
But that breakthrough applies to one sector of the market. And a lot of times people group everything together. And I think it'll be much more obvious to not group everything together once really mundane shit is NFTified, like accounting and proof of authenticity for like a car. Like, this stuff is not sexy at all. Nobody gives a shit about an NFT that represents ownership of a Prius, right? And but right now, what do we have? We have art, we have collectibles. That's kind of it, right? We haven't even really seen a prominent music bull run, which I think a lot of people expect to see. So what you're seeing is you're seeing people say royalties are going to go to zero. What happens? The artists get outraged because they're like, you're trying to fuck up the progress that NFTs have brought to us artists. But I'm not saying that that's going to happen. I'm saying that one sector of the market may have royalties trend towards zero. That's what I'm saying.
There's some markets where friction is not a bad thing. And I think are we frozen? I'm sorry. I froze there for a moment. That must be my computer. I think that what we're seeing is more so that just, I do think royalties as a whole makes sense. And I think that some degree of friction is fine. I think, like you're saying, there are subsets of the market where friction won't make sense, where fast trading NFTs are like a critical, like an important thing, basically, where you could even think of it to a degree when we talk about access passes and things like that, a royalty doesn't make any sense. But right now you can put 0% on those and you can still distribute to people NFTs without royalty even mattering. So I think it's more implying the fact that there's going to be marketplaces that charge little fees, and additionally, sidestep the creator royalty. That's basically what I think people are fearful of. I just don't think that there's enough volume on the vast majority of art NFTs anyways to even make a difference, like, over the long term. But it's also a weird thing, like, who's going to make an effective art marketplace when the artist is not being paid? Because I know a lot of collectors who say, I want it to go through here so the creator can get a royalty, basically.
Yeah. And I mean, there's fees in every market, right? I mean, there's in real estate, you have realtor fees, like fees in a market are natural. But when this whole topic came up, I did a little research because I've played a lot of poker in the day. And I also do daily, fantasy sports, or like sports gambling. And both of those markets are they're trader markets. They're very similar to NFTs, and they both have fees on them as well. I mean, an easy way to think about it is, think if you're sitting at a poker table and there's $100 around the table, right? And $100 go into the pot and the casino takes 10%, right? Now you have $90 around the table, right? You play another hand, it all goes in. Now you have 81. Now you have 72, right? Like, the fees have a very material impact on the liquidity of the market. So I did some research and I found an article by a founder of a daily fantasy sports company that did this exact analysis. And the standard in daily fantasy sports is 10% royalties, which is right around where we're at for NFTs. And mathematically, if you're at 10% rake in daily fantasy sports, the long-term amount of winning players is between 0 and 8%. So he averaged it out to about 4%.
The house always wins.
The house always wins. only 4% of players can be profitable with a 10% rake, right? As you move that number down, this isn't an argument to go to zero. This guy wasn't saying, I want to make no money as the owner of a daily fantasy sports company. But he said, mathematically, as that rake, as that fee comes down, the amount of profitable players goes up substantially. And when you're thinking about trying to create a healthy long-term market, you want a higher percentage of winning players in your ecosystem, else you're going to have no one left after a certain period of time. So he looked at, for example, if you take the fees from 7.5% to 6%, you double the amount of profitable players, right? So when you're thinking that like 10% rate, there's 4% profitable players, at 7.5%, let's say there's 15%. Just by going from 7.5% to 6%, you make it from 15% profitable players to like 30, right? And I think
massive difference.
Massive difference. And if you get the rake all the way down to, I want to say like 4 or 5%, you get like somewhere in the range of like 40% of the players can be profitable, right? And so when you apply that to NFTs and you think about what's happening absent of a ton of new liquidity coming in, it sounds about right that at a 10% rate, probably only 4 to 8% of us is winning at NFTs. If as a community, we can get that rake down to 5%, we may have 30, 35, 40% of traders actually able to successfully trade.
Do you have what the numbers are as you go? Like, is there a table that breaks down what percentage ends up winning, and what's the highest amount? If you make it 0, what percentage is winning?
If you make it 0, I think it's 50%.
Okay.
But 0 is, so look, there's no question to me that the marketplace side is going to trend towards or near 0. I think it's going to be sub 1% probably inside 2 years. That's obvious because you're still printing money. These are digital assets. And once you, from a technical perspective, build something really efficient, you can get to that near 0 level. That's the level that Robinhood is at. That's the level that all of the big time, stock platforms are at. That's what Strike is doing with Bitcoin, right? All that stuff is the case. And then you still have plenty of room for creator royalty. If we're saying at 5%, we're at a decent percentage of people winning, then you can do a 4.5% creator royalty. It's just not a terrible situation to be in. Like there's much worse situations, and the way it would encourage people to come into the space and encourage more liquidity to enter the space, it makes it a no-brainer. But like I'm like, my opinion is firmly that marketplace royalties will trend towards 0. And I believe that's the pitch of X2Y2.
Okay. Yeah, I don't have anything to add. I think there's a difference between the marketplace and the creator royalties, and that's something which is
definitely
a major difference. I do think that 10% creator royalties is high, but that's only because that's where we've set the high bar at with OpenSea. That's where they cap it. It is interesting on secondary transactions you could have like an entire debate on what it should be. What's the justifiable price? The bigger issue where this came in on the art side was that you have a place like Christie's auctioning something off, taking 50% of the sale of $100 million asset or something like that, and the artist gets nothing. And that's
the collector gets 50%. Or excuse me, the seller gets 50%.
Yeah.
The house gets 50%. The artist gets nothing besides them saying, all right, well, hopefully when you sell your next thing on the primary market, it'll be worth more money.
Which it is. And that, yeah.
Unless there's a bear market 3 months later and the artist didn't have a primary sale on deck.
And I think that there's going to be projects that are successful with super low fees. There's going to be artists and projects successful with like higher fees. I really think like the market can decide that. I do think though that the pseudo swap, while maybe it's not the final iteration of this model, I do think that it's very interesting because with the pseudo swap model, essentially there's 0.5% marketplace fees, for lack of a better word, but then you can people that provide liquidity to pseudo swap, they make money on the spread. So you could envision a scenario where it becomes standard for projects to mint, keep 10% of their supply and then they throw the 10% of their supply on pseudo swap, and they just make money on the spreads of buying and selling, and they may end up coming out with, you know, decent fees potentially with that model. But I don't think the model is broken or anything like that. I do think that 10% fees is absurd. I
Are you laughing at the mathematician comment?
Yeah. Steve says, as a mathematician, politely, that analysis was complete bullshit, which is hilarious.
Which analysis? Because if he's talking about my analysis, then he's one of the dumbest mathematicians walking. Because it's straight just mathematics that if you have a fee that is sucking out money from an ecosystem like a vampire, you have less winning.
Yeah. I think you're right. I think the
maybe
thing,
the numbers were off. That was all.
But who knows? Steve, give us the numbers, and then maybe you can help us with actually giving the distribution. The reality is on any given trade. Well, that's not true. What a bigger question is excluding fees, which when you look at OpenSea at their API, when they end up reporting via their API a sale price. The fees are excluded. Well, I look at the total price, which is interesting. And so the real question is, what percentage of people win or lose? The problem is with a fluctuating market, like theoretically, if you recall, there was an article months ago about Bitcoin, for example, with 80% of people being underwater on their Bitcoin that they had bought.
That's a great headline.
Some number like that. But maybe it's correct. Like,
it was correct.
Yeah. So the problem is in a floating market, it's harder to be up. And I saw also the other day a tweet about like the majority of prices, and it was circulating about like, remember these projects, and the floor price was down like 90%, like just across the board from peak, including Bored Apes. Bored Apes, I think, are down 80%, right? Because we neared 500,000, I think 450K. We're down right now to 150K, which is tough times for the apes. But in terms of like win or lose, my guess in the NFT space, the majority of trades are losses. Like that, like regardless of zero fee. With the casino, I think your numbers are right, Kicks, in the sense that like 50% of people tend it, like the distribution.
And it's not necessarily 50% of people, it's 50% of like 50% winning trades, right? If there's zero fees in a marketplace, you only have to win 51% of the time to be profitable, right? If the fees are 10%, I'm just guessing on the number, you need to win like 6 out of 10 times, right? Or 6.5 out of 10 times to come out ahead. So basically that's the fees just adjust the percentage of winning trades that you have to make. And I linked the article.
This fucking mathematician has tickled Nick's funny bone. And now
I'm just, because we did some math the other day and I don't remember what number it was that we were talking about, but I just remember being like horribly wrong whenever, like, I was just like, what am I even talking about? Like,
and then my CryptoPunk estimate today was literally off by a 0. You know, it's like, it's pretty big. It's a pretty big difference.
That's 7 CryptoPunks traded today.
Try 70, dickhead. But yeah,
70 is still pretty. When you think about that, the entire NFT market being 70 CryptoPunks per day, that's bad.
Small. It's a small market right now.
Tiny. But I mean, speaking of CryptoPunks, basically, the number 1 and number 2 projects out there in the NFT space, CryptoPunks was free to mint, 0% fees. They're number 2. Number 1 is Bored Ape Yacht Club, pay to mint, you know, what,
2.5%.
Yeah, but with OpenSea 5 total, because Larva Labs, you can actually trade on their marketplace and get a true 0% fee. So both models work, right? It's not going to be, you know, only one or only the other is going to work. But I do think that the argument around secondary fees, and also like the fact it's just absolutely absurd to me when some people say like, well, what's the incentive for a project to build if they're not getting secondary fees? It's like, bro, did they just make $5 million off of the mint? Like, is that not enough money to build something substantial for multiple years.
You're like,
Thank
what's the
you.
incentive of these nuts?
Dude, you make okay, like Yuga Labs made $80 million on mutants. If they had 0% fees, if they had an absurd payroll of $10 million a year, they could build for 8 years. Figure out other ways to make money. This fact that it's like, oh, we made $5 million on the mint, but if you get rid of secondary fees, you're just kind of forcing us to rug you. Because like, what's the point to stick around anymore?
We run the business on secondary fees. Yeah, I mean, look, I beat this drum so much. I beat it on the morning show. I type it in the Discord. I don't need to do it right now. But anyway, just look up how much some of these projects make on the primary market. And then
imagine the founder of Beanie Babies who made billions of dollars being like, yeah, I couldn't have done it without secondary fees. Man.
It's hard. So one is saying is operating. You're correct, which is you're talking about these companies like being home builders or something like that is essentially what they are. Is they're launching a project, they're building a building, they charge the fee, they make the money, and then you say, all right, home builder, go and make more things using that revenue from that big building that you sold. And to me, I would say, well, then you don't have a business. Like you just sold one building. And they need to have some sort of approach to generating recurring revenue. And the argument is they are an NFT business. So I'm in favor of the secondary revenue. I think like when we report on our own revenue, for example, when I send an email to investors to say, here's what's going on, I have top line revenue for the year for H1, for example. And then I go and say, excluding primary sales, here's what our revenue is. And it's a depressing comparison. But the bottom line is that's the sustainable business. So like either for us, we have ad revenue is a major portion of our revenue. And then the other major portion was secondary royalties, which we got for a period of time, definitely during the peak activity in like April, May timeframe. And for us, that's incorporated. And when I go to, if we try and sell a business, years down the road, then someone's going to be saying, well, what's your recurring revenue? Like they're going to be looking for that. So I don't know. I think it's important. Conversely, I understand exactly what you're talking about, which is, look, if your primary sale was $80 million, Pixelmon, then the secondary revenue doesn't freaking matter, right? Like you're essentially killing that business. I could see there being like times where people say, you know what, y'all are right. Right now, we're going to lower the fees right now down to 0 while we prove to you.
Yeah.
And that's a lever that they have the option of pulling. But if we're actively building, I don't know, we need some way for operating. I don't know. Is ours is 5%, I think.
Yeah, and I mean, the other interesting thing is I completely lost what I was going to say. It was definitely about fees. That's for sure. It'll come back to me in a second.
Did you get distracted by the net comment or something else?
What's the net? I got comments.
Oh my God, that neck he's doing shoulder shrugs. I don't know if they're referring to my neck.
Wait, who's got the neck?
Neck.
Kangaroo Express said, "Oh my God, that neck."
The other ironic thing about like secondary fees is the fact that you have people that are like, oh well, like I'm an investor, like I'm not a trader, right? So I want to like buy my NFT and hold on to it for 2 years or whatever, right? Like if everybody takes that approach, then there's no secondary fees. If you think about it, secondary fees are generated, Josh Bobrinsky said this, by investor churn. And that's like 100% accurate, right? You make money when someone leaves your project with secondary fees. That's the fact of the matter, is you're making money when someone is selling out of your project. Like that's the fact of the matter.
That's the beauty of it is like, you want out? Go ahead. I'm going to get a fee on the way out.
Yeah. How much money did Azuki make after everybody panic sold when they found out like that Zagabond was behind it, right? They like made another $1 million or something like that.
Because there were so many transactions bouncing up and down. People were buying the dip, selling. Nick, what's funny now?
Says all neck. That's pretty good.
I mean, Nick, I meant to tell you, people have been talking about your neck and they're just like, yo, is that guy like a professional, like a professional
He's got a big
weightlifting
neck.
guy? Or
I thought what eBrink said was pretty funny. Like we should have like, you know how states will have like, you know, sales tax free weekends. Like we should have like no fee weekends. Like this weekend only, like you can trade Bored Ape Yacht Club, you know, with 0% fees.
I mean, that's an idea for sure.
Right. But at the end of the day, I think that good projects like should be able to charge secondary fees. And if they're like, you know, using that revenue to actually grow the business and make a better product, I'm all for it. I just think that mathematically, the lower the fees are, the more that investors win. It's just math. And so I do think we're going to trend downwards, just like we trended downwards from Nifty Gateway to OpenSea.
Yep. And, you know, we got one last comment. He does neck pull-ups. So that's another quality comment. Last topic. Oh, go ahead, Nick. You have a comment on that?
I don't even know what that means. Neck pull-up sounds just dangerous. Like, I don't know.
It's interesting that you do them and yet you don't know what that means.
With my teeth.
I mean, look, so like when you just kind of went like this, I saw like some movement in the neck that where I was just like, oh, wow, he really does have some serious neck.
You remember Tropo Farmer like took his Bored Ape Yacht Club and made it like a thick.
That was hilarious. Yeah, it was a fat. He made his ape fat. It was pretty funny. All right. So anyway, we got neck ups in the comments. Last neck comment. That was good. All right. Last topic. Solana and the fact that now it almost feels like some of the Ethereum stuff is trailing the Solana space. Meanwhile, D-Gods, you know, old Frank making the token Dust and now the project Utes really seems to be pushing things forward on that blockchain. And if anything, it feels to me like there's more activity there. There's more excitement than on Ethereum right now. Do we think that the Ethereum blockchain, that, you know, anybody that's just singularly focused on that is going to be a dinosaur, and all the young kids are going to go to Solana, and Solana is going to be where it's at? Like, are we going to be left behind if we don't integrate Solana into our NFT behavior?
Well, how do you check it? So are you trading on secondary right now?
They have not minted yet, I don't believe.
Okay.
Yeah. I mean, I own a bunch of Solana NFTs. I'm like agnostic. Like I want to buy projects that are cool. I don't really care the chain. Having said that, like there is chain friction, right? Like I've never been on Tezos other than that Dogami, which I probably should have sold, still hold that.
Definitely should have sold it.
But I like Solana a lot. I've like traded on it, but like I do think it's funny when some people are like, yeah, like, you know, Solana is just like crushing it. And then you load up like DApp Radar and it's like, okay, OpenSea did $13.58 million in the last 24 hours, and Magic Eden did 354K. Literally, the CryptoPunks website had 3 times the amount of trades of Magic Eden.
Damn.
Yeah. Yeah, like they were a very tiny percentage of NFT volume over the last 24 hours.
So
okay.
Yeah, I'm on the same page. It's a portion of the market.
I feel like I'm trying to push the narrative that Solana.
I'm interested in. Well, okay, you were discussing the zero fees playing out in Solana world. How did that go down? Like what happened and how's it playing out?
They were discussing it. And
one marketplace came out with 0% fees, and that's what like caused the uproar, is that they came out with 0% marketplace fees and also 0% creator fees, and so that caused like the drama on Solana, and all of that jazz. Like once again, I'm a big fan of Solana. I think there's going to be cool things happening there. I don't think that they're doing materially better, innovative, different things than we're like seeing on Ethereum. Like the whole D-Gods thing with like Dust, like CyberKongs did that with Banana Token in like summer of 21. Like, so they're like a year behind on that innovation. But what like Easy and I played that first person shooter, I'm blanking on the name, on Solana. Like there's nothing like that on Ethereum to my knowledge. So, I mean,
Mini Royale.
mini royale. Like, yeah, I think like the bull case for like Solana is that they like take a lot of gaming activity in the gaming market. And other than, you know, the Axie Infinity run, we haven't seen like a real crazy gaming surge on Solana. Although you can argue that the Step and Shoes, which was massive, and that was on Solana, right? So there is interesting, innovative things happening on Solana. But like, I do think that like they could probably win significant gaming market share. I think, you know, gaming is going to be due for a run in the next 2 years. That could be very significant for them. But at the end of the day, yeah, I don't like really subscribe to like the ETH versus Solana tribalism. I'm just like, you know, I'll buy something on Solana. Like, I think the Utes are pretty cool looking. Although K Dean says it's just like three landers on Ethereum, apparently.
Wow, I bet K Dean wouldn't have wanted you to say that. No,
He's publicly said it. He said it on Twitter publicly, so I know he didn't just say it to me. So
K Dean, holy smokes! Wow, okay.
He's just saying visually. Hello.
Yeah, he's saying visually that they look very similar. I think. Yeah.
I don't think so. I think Utes looks really good.
I like Utes. I like the Utes. I want to get some Utes.
Nifty Nick's getting that Solana wallet out, and he's going to be aping Utes, ladies and gentlemen. Watch out.
Yeah, I would definitely buy some Utes. I think they're cool. And yeah, man, I think that the Solana ecosystem is definitely very different. I like that they don't act so elitist. That's refreshing. Right? They're not over there like, yeah, we're the shit. You know what I mean? Like you got some scraggly looking, you know, bros on that. You know, you got your potheads over there and you got your innovators over there, but they're not all like egotistical. It doesn't seem like, but yeah, I mean, they're 10% of the volume of OpenSea. So they still got a long ways to go, but I think there's cool stuff happening there.
You're sounding like Hillary Clinton right now, talking about the what was the statement she said that was used about the voters that were
the deplorables?
The deplorables, basically. And yeah, so you're basically calling them a bunch of deplorables.
A basket of deplorables, I believe.
I fit right into that. So, but yeah, man, like I really do think the gaming side of Solana is where they can potentially capture a ton of market share because the speed of the transactions and the zero gas is massive for gaming where you need a ton of transactions and liquidity to work. So, but are they even proof of stake, bro? Like,
and we can leave it on that. Ladies and gentlemen, we hope you enjoyed the show. Make sure you sign up with our link to FTX, the nifty.com/FTX, or with the code the nifty on your FTX mobile app. We'll be back with this squad on Wednesday. This squad does Monday, Wednesday, and Friday. All right. So we'll check in with you on Wednesday. Thursday is the debut of Node Mode, the new podcast featuring Depeche Node. Hope you enjoyed the show. Catch you guys next time.